Good morning, everybody. Happy Monday. Welcome into your FreightWaves Now Community Spotlight. I'm Kaylee Nix, and we are starting off your week into Monday morning with Mike Bowdendistel, host of the Stockout. Mike, thanks for joining me this morning. How are we doing?
Doing well. I'm going to miss the Olympics. That was 2 great weeks.
Yeah, 2 great weeks of exciting stuff. It feels like it happened so fast, but as we know, with coming back to the United States for 2028, and I'm sure that will be here sooner rather than later. And we'll get to experience a little sense of patriotism once again on our home soil. This week, Mike, we've got the Stockout show coming up here in just about half an hour. Give us a little preview of what we are talking about today on the show.
Yeah, so today I'm going to dig into the ocean market, and I have a really great guest. It's John McCown. So John has over 4 decades of experience in the ocean industry. He was the former CEO and co-founder of a company called Trailer Bridge, which does container movements in the Caribbean. Has also attacked the ocean industry from the investment angle, was with a hedge fund, investing in those companies directly. So he really has a wealth of experience in the ocean industry. And I think the ocean industry is really a hot topic right now. Sort of last week, Maersk reported, and they talked about how maybe for now, the ocean spot rates have peaked. I mean, yes, peaked from sort of a very high level, but they're expecting those to come down, somewhat, considering that the capacity is coming into the industry, 2-3% a quarter, combined with an expectation that volumes will maybe tail off a little bit seasonally, but volumes have been setting new records, as we've been talking about on FreightWaves.com. So a lot to dig in there, sort of what exactly is driving that strength. Is it inventory restocking? Is it a pull forward from a later peak season? What is it exactly? And then we're going to talk through disruptions, since the sort of focus of the show is what should shippers do. There's been some unusual disruptions this year with not just the Red Sea, but then sort of follow on things like congestion in Singapore, shortage of ocean containers. I think there's a lot to talk through.
Yeah, container volumes have kind of been this spot of hope that I feel like a lot of the downstream market has been holding on to when we talk about a freight market recovery. And it feels like every single post that I see on LinkedIn from people who aren't here at FreightWaves and I don't talk to on a regular basis continues to be about well, container volumes are still peaking. Container volumes are peaking. So we're holding on hope for the truckload market. Is that actually the case, or is their hope a little bit misplaced right now?
Well, for right now, it's a little bit hard to say. I mean, one of the interesting things was, J.B. Hunt, when they reported, they said that they have not seen the volume either on intermodal or truckload coming out of the West Coast that would be commensurate with the degree of imports coming into the ports of LA, Long Beach, particularly Long Beach, which has been really the one that's shown the most growth. So it does sort of suggest that maybe those inventories are being rebuilt in Southern California and the Inland Empire, and maybe we see that a little bit later. Earlier in the year, Hapag-Lloyd was talking about how they thought that a lot of that strength was being driven by inventory replenishment. I think ever since the pandemic started, companies have had a really hard time pinning down the inventory situation and getting the inventory situation right. There was a Class 1 railroad that is a Sonar customer, is talking to them, and they said that they used to be able to just look at what the National Retail Federation was expecting for retail sales, and that's exactly what the resources they would need to have at near the ports, on the railroad, in those areas. And then they said ever since the pandemic, the inventories have either been too high or too low, and they've needed to rely on other things, including what the ocean containers say, or what the ocean bookings say inside of Sonar.
And that's kind of the point, right? It's still very tricky to find this delicate balance of the post-pandemic life, even though we're about 2 years out from that first true sustained decline that we saw in the freight markets. And we're still having to see just how difficult it is to find that balancing spot, which really highlights what the pandemic did. So we talked a little bit about spot rates, but what about on the contract side of ocean rates? Where do we think those are headed now?
So those tend to be influenced by the spot rates on a lagged basis. And so what the carriers are saying is that the contract rates should be higher in the third quarter than they were in the second quarter. It's just kind of a lag effect of what happens in the spot rates. John McCown, who's going to be my guest today, I mean, he's talked about how that second spike in spot rates this year really came on at an inopportune time, because that's when a lot of the contracts were being negotiated. So it does seem like shippers are going to suffer from higher contract rates in the near term. And when we talk about the container trade, those are really the more important rates. So it's kind of good news and bad news for shippers in that regard.
So we're just about halfway through August. We've seen a bunch of companies come down the line and report their second quarter results. Anything come out that was surprising to you, or is there anyone that you're still watching to report that could maybe give us some insight into what they think the end of 2024 is going to have in store for us?
Yeah, it does seem like they're, sort of on balance. There's still capacity in the freight industry. I think that some companies that were maybe a little bit, more optimistic earlier in the year that there would be a turn that they'd start to see by now, that some of those expectations have been pushed a little bit later. I mean, a lot of the consumer companies that we follow and retailers that we follow for this the Stockout show, have talked more about consumers, they're kind of middle income, maybe a little lower than middle income, cutting back, trading down. That does seem to be disconnected from record import volumes, unless it's just rebuilding of inventory or a pull forward. But just lots of indications that sort of the average consumer is under stress. I mean, just things like pulling back on Starbucks volume. I just saw that Monster Energy talked about how they had an unprecedented drop in demand at convenience stores. Things like Nike shoes on their sort of more athleisure type of segment. So just a lot of little things that maybe aren't big ticket purchases, but just sort of indications that people are cutting back on discretionary items. There's an article about how people are starting to cut back on even travel expenses, which had been one thing that had sort of been gone unabated lately.
It seems like those little tiny purchases might be inconsequential, but they definitely add up when you look at the bigger picture. Mike, for the show coming up, we've got about 30 minutes. Where can people go to find that? And then where can they go to subscribe to your Stockout newsletter that comes out on a weekly basis?
Yeah, so the show goes live on FreightWaves.com. We also have a FreightWaves YouTube channel, which you can go back and look at all the previous episodes, see which ones appeal to you. And then for the newsletter, just go to FreightWaves.com up at the top, go to subscribe, and FreightWaves.com/subscribe, and subscribe to any of the ones you want, or just up at the top under communities, you'll see the Stockout.
All right, Mike, thanks for joining us this morning. We'll catch up with you in about 20 minutes right here on FreightWaves TV.
Okay, thank you.